Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Prerana, fixed income strategist. With an objective to empower you with investment insights, on this program, we discuss various perspectives that are shaping the global investment landscape. If we look back at the year so far, not much has really changed in terms of the growth and inflation dynamics. Inflation has softened, but at a slow pace, while growth has surprised on the upside. The Fed has remained aggressive with its rate hikes, having signaled a possible pause at the last May meeting, but overall risk of another rate hike still appear higher. Banking instability and debt ceiling concerns have added to overall bond volatility. The MOVE index, which measures the volatility in the treasury market, has jumped since the beginning of this year. Despite the high bond volatility, fixed income assets have managed to score positive returns since the beginning of the year. Global corporate and global high yield bonds have been the best performers year to date, outperforming even global sovereign bonds. Looking deeper into the subsection of asset classes, short duration assets, which includes European high yield and US high yield, have been the winners again. Spreads in the US high yield and European high yield have in fact tightened year to date, despite the risk of being close to the last stages of the Fed tightening cycle and recession probabilities being high. The dispersions between one-year recession probability and the high yield spreads is particularly evident in case of US high yield. The rating-wise performance year to date also shows wide divergence, with the CCC rated and AAA rated bonds being the top performers so far this year. Despite the recent economic outperformance, we believe the high yield outperformance is likely to fizzle out. US credit in general tends to face widening pressures, particularly after the last rate hike in the previous tightening cycles. Given the backdrop of restrictive Fed monetary policy likely to weigh on growth, we still believe it is prudent to stick to quality. Hence, we maintain our neutral stance on US IG and underweight on US high yield. As always, thanks for listening to our podcast. We hope you find it useful. And if you do, please share it with your family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log into our website www.adcbam.com. This is Prerana signing off.